Welcome back, guys, to the IPOs ranking tier list. We have Stubhub, Pattern, Netskope, Bridge for a part 2. A little bit different rankings. Figma, good for limit plus games. Allocate some for pre-IPO and 50-50 chance of actually going in the green. So today's part 2, we're going to inbound breakdown analysis of every single IPO. Just to give yourselves a little warning, there is a little bit of a less quality of companies this time, but of course that is because IPO hype is going a little bit down because the IPO trend. Of course, later in the video we do have a little bit of a limit order update with our fast versus slow moving limit orders, pre-IPO updates and how you should request to get the most shares, and of course our rankings, which is what you all came here for. Of course, this is what our old metrics: size, business model, financials, compare IPOs, institutional investing, and retail hype. And I changed the order to have the most optimal settings. Of course, the most important thing for each of these companies' IPOs is retail hype, then the business model, then institutional investing. Then of course how similar to other past IPOs. And then the second to least one, the least important metric, second least important one, size of valuation company, and of course the least valuable one for IPOs is financials slash profitability. Unfortunately for these, but we knew hype was the main player anyway. So of course we had to prep. Like I said, we already know this. I explained this in my other video. Feel free to script this if you already know this. Or subscribe rates. We have shares filled. How many shares? This is prep you do in the morning before. Once you wake up the day before your IPO, how many shares you got, preparing for a limit order. Track the pre-IPO price. We have the Freedom 24 app. If you don't know what that is, that's an app that can basically predict the pre-IPO price. Limit order setting and adjusting. In the morning, you should set your IPO, because if you didn't know, the ticker symbol comes out in the morning. The ticker symbol is technically already out if they offer pre-IPO, but you can't set a limit order into the morning. And if you have a different brokerage, the ticker symbol will be listed in the morning. And waiting till 9:30 to 10:30 Pacific time. If you're Eastern, that is 12:30 to 1:30. But this is the range basically where most of the IPOs come out. If your IPO is less hyped up or smaller, less demand, it will come on the earlier side of the scale, maybe even before that. And if it's really, really hyped or there's a bunch of them that day, it should be coming out later, since I have to process more orders. Basically how it works. And of course my edited buy and sell strategy right there. So like I said, we're going over buy and sell strategy, pre-IPO rankings, and the limit orders here. So of course, let's get into our very first one. On the 17th, we have Stubhub very, very, very soon. Let me make clear, $22 to $25 is not the actual valuation. Just because VO is $40 to $5 doesn't mean it's expensive. Basically how it works is the amount of shares versus the valuation equals the share price, actually. So just because it's a higher share price means there's probably less shares in circulation compared to the valuation. So why I do valuation? Of course, this is not an order through two factors. The most important is actually hype, which is in the bottom right here. But of course you have valuation, which is really, really important. Klarna did well, just not because it was large, not because it was a good company, just because it was a large company, which actually pushed the hype. The larger the company is, the more mainstream media it is, which actually pushes hype. Another bad thing about hype is because maybe there's gonna be less liquidity because there's so much shares out there compared to the other ones. Another reason why Gemini might have done so well. We always look at past IPOs, which I'll talk about later. And of course, they're Ticketmaster, basically existing competition, very low margins into this. You may have used them to snipe tickets before, so it's basically. And of course, 4 to 10, are they profitable? They're losing money, not terrible, but of course below, at 1 point below average. Size is around Klarna. I know Klarna was like 14 billion, but around the same thing. And model is Klarna. Why do I say it's like Klarna? It's around the same thing. They're both going to be by themselves on the same day for IPO on the first of 3 days of IPOs. And of course they're both going to be the standard boring company, buy now, pay later, and basically tickets right there. 6 out of 10 institutional interest right here. No. So venture capital and no confirmation. So there are a bunch of banks and venture capitals that are thinking about investing here, but there's no confirmation, unlike the other one. So I'm going to give it a 6 out of 10 here. So not that bad though for the other ones. And of course the hype score, I'm going to give it a 6 out of 10, which is not that good. I gave Klarna a 7 out of 10, and I gave Gemini 9 out of 10, which really puts up the hype. And of course, I put -1 for the Klarna factor, because it's just a big, boring company. But the fact that it's a large company is what puts it in mainstream media. Of course, you have Waterbridge, my personal favorite here for valuation, coming in at 2.3 billion valuation, $17 to $20. I did this like last night, really late. I guess I was spelling everything wrong. Infrastructure, water, gas, and oil, because I was pretty busy, so I had to do this at a time, and I head to school after this. Basically, what this does moves water versus gas, energy, and oil. I'm pretty sure, honestly. I was looking at this. I know that the main reason I do like this company, you know, the little tune to the business model. It's a low one. I love infrastructure plays. I have a ton of energy companies. I ran actually real down to earth uranium companies or just straight energy companies, mainly oil and natural gas, specifically for this one. Oil, I meant natural gas, which I'm going to skip over here. The reason why I like this company so much is because their parent company, they already have a company on the stock market that is doing well, Landbridge, which basically does like rentals compared to like more like land bridge, like land, and then Waterbridge because dealing with water and not oil, not for gas. You understand? So they already have a parent company that has a stock market on the market that's actually done like over 100% in the last 5 years, which is actually doing pretty decent for infrastructure play there, rental play. And then for some other similar plays, I think if you're interested in these water infrastructure plays, KX Kirby stock, that's gonna be worth like they move where they take the freights or the big cargoes and they move liquids inside of them overseas. And then flow services is where they provide the actual tools for the water services maintenance. So 3 out of 10, they actually have a pretty big loss because it's one, it's smaller, and two, it's capital intensive. They need more capital, obviously, than all the other ones. It's not just like a software business. Actually, you need real physical items, and that eats into the thing. Like I said, institutional backing, 8 out of 10, very, very highest thing we've ever had here. I didn't do Figmas and circles on the YouTube channel, but it's the highest because backing from its parent company, because of course the company has Landbridge, of course, is going to back this one too. So then say, hey, it's amazing, and they're going to buy up to 120 million from up to 120 million, and then basically mean the parent company's option up to buy 120 million shares of the pre-IPO if they want to. And also, like I said, look at the similar companies here. The hype is about average, 5 out of 10. It really depends who you look at. If you look at any fundamentalist like me, they love absolutely eating this up. But the thing about these companies is, you know, Jonah from TikTok or Instagram, like the biggest IPO influencer, if he's not talking about any of these. So you already know the hype is really on the down low compared to any of these. So none of these have a score 6 out of 10, 7 out of 10 on hype by itself, just because there's not going to be a lot of hike compared to the other ones, but that does not mean we can't make a lot of money on this. So it just might be able to allocate a little bit less or temper our expectations a little bit. Netskope Inc. $6.5 billion valuation, really nice size here. Cybersecurity and cloud security in high demand. So think of the CrowdStrike. And actually, if you look at more cybersecurity stocks near the price range, they're actually all tanked because they're obviously hard competing with CrowdStrike and Palo Alto Networks. But of course, this is a really nice business model name. Of course, temper my expectations for this one. A regular loss, 5 out of 10. Regular company, regular loss for the size. Nothing special, not profitable yet. 20% is actually owned by venture capital, so that is really interesting. So make sure you get Lightspeed Venture Capital if you've heard of them. 7 out of 10. I probably a little bit on the optimistic side for a bunch of these. A 7 out of 10 is nothing special, probably about average. It is not on Robinhood. I'm telling you, Robinhood stock for 7 out of 10. This is 7 out of 10, not on Robinhood. But if I'm taking into account the Robinhood factor, and this is probably like a 6 out of 10. So about your average stock. Another one I like here, not as good as Waterbridge here. Basically 2.64 valuation pattern. This is similar to Giga Cloud technology. It's basically where they help the underlying Amazon network with their technical data and optimizations with actually moving their goods and services. Giga Cloud technology is already active in the stock market, no affiliation, just really similar business model. They actually help moving bulk orders, which is I used to invest in there. They made a pretty penny if you want to compare it to something. And of course, they're very. I think they barely were profitable. I know I can't spill because I made this like right last night. But similar to Figure, they're a very small company. Of course, Figure is 4.4, and they're barely profitable. So, as you see, profitability does not mean success, especially in limit orders. Figure, we did not make a lot of money on a limit order. But I'll get into how the previous IPOs did affect my strategy, of course. Size, similar to bullish. I have no idea what I said because this size is not similar to bullish, and no really big names backing this thing because that's in hype. Of course, I'm getting this video as soon as possible before I get to school because I told you guys to get this out, so I really have to get this out right now. So size, StubHub's the largest. I think it's $9 billion valuation, pretty good. But it's like Klarna scenario, pretty decent boring company compared to all things considered. Compared to other ones, Netskope size, it's like $6 billion valuation, cybersecurity, Pattern 2.6, and then Waterbridge $2.2 billion. So basically in that order. Then of course business model Waterbridge. Of course Netskope technically has the best one, but I'm so biased to Waterbridge, so I took a own point of my own. I added to this thing and I pushed it over, and then I tied. Kind of like water bridges and water infrastructure and oil and natural and gas infrastructure business. And then Netskope cybersecurity, of course, you would be more impressed usually, but if you compare it to other ones, its size, it's not that special. They do work with 30% of the Fortune 100 companies, so they work with at least 30 top 100 companies in the Fortune 100. Interested why I didn't use Fortune 500 as a metric, probably for some specific statistics reasons. But Pattern, really simple here. Amazon, I'm gonna say Amazon e-commerce solutions here. Honestly, I like this. I tied it with Netskope. And for Stubhub, just Ticketmaster. They're breaking other things, but they're just basically a Ticketmaster. Very low margin business here. Basically cash grab from them to Sandy Klarna for going an IPO. Profitability Pattern, of course. Pattern is number one profitable. And then Netskope, basically next is like the companies that aren't profitable, but like how non-profitable are you? Netskope 3, and then Netskope 2, Stubhub 3, and Waterbridge is 4 because they have so much capital to buy and they're so small. So compared to their size, they're actually losing a lot, but that's normal for a company of that size. Similar, I really didn't put any similar because none of these are really similar. The only thing that's even similar is that Stubhub is like the average similar size to Klarna and the same boring business model, basically. And institutional interest, like I said, Waterbridge is number one. Scope has some of the venture capitals too, but mainly Waterbridge has the main backing from its parent company. Stubhub has some. Pattern basically has low to none right now. I'm not sure about why, but of course, now I said retail hype. Let's just get through this. Retail hype. Of course, if you guys have any questions, leave them there in the comments. I left out a bunch of like the actual how-to stuff. I have more at the end, but I really shortened it. So I'm gonna check the time here. Alright, we're good. So number one, retail hype. I don't have one for retail hype. It's none, because none of them really have the hype you would look for in IPO, realistically. Like none. Like there's a Robinhood effect, and the ones on Robinhood don't have the Robinhood effect. It's Stubhub and Pattern. One Pattern too small, and it's not really. Well, I can't say too small as a factor because Gemini popped off, but I'm realistically saying Stubhub 1. I really don't want to say Stubhub 1, but it's because it's the largest, it gained the most media attention, which would help, and has a Robinhood effect. Netskope, of course, cybersecurity 2.4 million, even though it's not on Robinhood. Potential limit orders. Of course, I like limit order and Waterbridge more, but of course, then we have Pattern. Robinhood effect, of course, so it's really close to Netskope. Netskope does have more hype, but it's right neck and neck and neck. It's really hard to gauge hype, especially when your boy, when Jonah is not posting about these, so, or anybody on TikTok, so it's really hard to gauge it. So, well, I'll get into later. It's actually even worth getting into these, but Waterbridge is last, unfortunately, in retail hype. Probably is higher. It's really, really hard to gauge that, so don't take those rankings too hard. So now running into my ranking, what do I have ranked the highest? I do have ranked actually in between limit gains and allocate sum, because it's not really enough to break through the high category because it's one, and these companies aren't amazing. But the fact that there's already a successful company on the market, and this is a nice little infrastructure and energy play, and I love my infrastructure and infrastructure play separately and energy play separate, which is all combination all in one. Two bunch of companies I have held and do hold. That's why I love this company. Like I said, you might be a little bit skeptical because I put Figure on my last ranking. You're like, Josh, well, the best company doesn't always do good. Well, Figure did pretty decent. I like to say I think they did second best in limit orders. Like I said, they're backing by the parent company, infrastructure play. They have their parent company backing them, and of course their stock. They do have a stock on the open stock market, and I do like this type of stock they are. So the thing is really for these, I explained in my limit order and pre-IPOs. Basically, if it's like a low hype stock like this, basically what either should happen, what I've seen happening is like none of them really open down. Even if they're non-Robinhood, they don't open under. I mean, they do open under, but at the end of the day, they always end over. So I'm thinking 6-9% was really nice for his last IPOs, even though they did open underneath their IPO price. Like Legends ended up opening over. VIA eventually went over because those are actually good companies. As long as you're picking good companies in the limit order, you might be looking good to eat. So this one might open a little bit down. We can check on pre-market and check if it's down or not. And then I think if it drops a little bit more because of the sellout for people that bought in for pre-IPO, then it'll start trending up a tiny bit since it didn't go up at all for pre-IPO. So this one's not really worth the pre-IPO play in my opinion, since it's not Robinhood. But we'll see. Next, we do have all these. They are pretty much in the same tier. Stubhub, Pattern, Netskope. Sub is a little higher just because it's a larger company on Robinhood, and also it says it's larger. It's going to get more media traction in general. And of course, Pattern, it's smaller. I really want to put Netskope above it, but just because it's not on Robinhood, I really can't do that since they're both nothing's like anything special. So I allocate some because I don't think any of these IPOs are technically not worth allocating to, because 50-50 chance. I'm giving it 50-50 chance to open up pre-IPO from red or go up or down, but I'm going to give that, actually change that to 50-50 chance of opening up or down in the full week after IPO. If you IPO any of these and hold them, I'm pretty sure that you should be chilling. Stubhub, Pattern. We'll see how this tests IPO hype. Since Stubhub's by itself, I think at least should be up a little bit, so I don't see the harm in allocating a little bit of your portfolio. Of course, you don't full port like you've been doing the term full port. I don't even know where people got that from. But limit order here, what changed it? So we have fast movers and slow movers, especially for fast. What I mean by that, Gemini is your example of a fast mover, something we know has low liquidity or maybe has high liquidity, but it's gonna be really, really fast, and we can expect halts in there. So if you were, some people were texting me, "Oh my goodness, our R100 freeze." I don't think it Robin freeze. It's called a halt. So limit order ends a hype. If it's basically a hype like in Gemini, basically what's gonna happen with limit orders, it's all limit orders go in at once. So it like snipes the open price. Basically is like, what did I want to call it, right? So when all these limit orders snipe the buy price at the beginning, there's obviously not enough sell orders for it to push down the price. So one of two things happens. One, the limit orders are enough to push up the price, so it's gonna have a little pump, which is where you take advantage of your limit order price, and then you can hold. You hold until it starts trending down, or two, this thing it breaks even for a few seconds, 4 to 10 seconds, if it's really hyped, before it starts then trending down. Because like I said, all limit orders went in at once, so that's the way when the first mass buy pressure is going to be limit orders. Most likely, people aren't going to get that. They're going to get in, but not to get then after that. So if it didn't move in the first 4 to 10 seconds, there's no harm in selling because basically you broke even. There's a small chance you are down. If it jumps, hold until falling, like I said, because of course these things have momentum. You hold until momentum ends. Halts equals no movement at all, so the price will literally stop for like 30 seconds to 30 minutes, and it's totally normal. Like for Gemini, we saw perfectly good, like less than 10 minutes, longer than 5-minute halt basically. Halt up is good, so if it stops moving when it's going up really, really fast, like Gemini, it's good for the stock, because that means there's so many buy orders than sell orders. They had to stop the price to process all the orders. So that's when we saw the price from 40 to like 45 instantly. And once we saw it, sometimes you want to hold, but usually you want to sell as soon as possible right after, at least when you see that first price dip, because usually people panic. One, because it stopped moving, and two, it jumped so high in price they want to get out and take some profits. Down halt equals bad. Like we said, after the up halt, there was literally a down halt. You do not want to be stuck in that, because I know it says 40, but they might fill you in the next available price. So once it stops at 40 and try to get out, it could fill you when like 30 minutes later, once it opens at 37, or 5 minutes later when it opens at 37. So of course you'll be getting out, but you'll be losing more money than you probably should be, and you want to get out once the halt up is over, not when the halt's down over. But that only happens on really high high stocks, because I think it happened for Figma and maybe Circle, but maybe Polish, but it didn't happen for the other ones. Of course, surprised it happened for Gemini, of course. But I should have known, since it's a low liquidity, high liquidity, very low valuated stocks, and not a lot of shares in the market. A lot of people trying to get in these. If it's a slow mover, hold. Like I said, if it's like via Legends, they might open a little bit under. If you're doing loan order, that company, that means you have fundamental interest in it. That means, it's a good company, has decent hype too. So even if it opens under and drops because pre-IPO, like 1%, 2%, because pre-IPO sellers are selling it, you buy into there and you hold for the day, and of course you can be rewarded nice little 6 to 9%. Same thing we did with Legends. Opted out in VIA, but it turned out the same thing for them. Even BlackRock Coffee, it did good for them too. So it seems like it's been working so far, hasn't failed there either. Of course, none of them has opened down, which is good. I'm gonna go over the hype trends, but of course, pre-IPO, I heard if you crossed over 100 shares, you get like this little formula where you guaranteed shares. For that to happen, you should do don't do an individual number. You have to do the preset range I've been doing the individual number. I just been screwing and getting one share to one share, because before it would like end on a range, but now it's ending on exact price, like 40, and then my preset price won't show anymore, which is really concerning. So I'm just gonna do the preset range they have for us, because that automatically updates. So that's probably the best thing to do. If you get one share, basically no reason in selling unless your portfolio is really small, and that's like your full portfolio or like half of it, maybe 1/10, because you don't want to risk getting restricted in case something good does something good files and comes out later. But honestly, you don't need to worry too much because they file ahead of time. So if Discord files, you'll hear tons of news about it. You hear me talk about it, or Joan talk about it. So all but one. There's still nothing confirming this works or doesn't work. If you have a bunch of shares, if you have 100 shares, there's no harm in selling 99 over 100. Better safe than sorry, I say. Sell it open or wait for more. If you have pre-IPO on the safer side, you can sell as soon as open. A lot of people don't have the time to actually wait for open. So like whenever you see open, you can just sell whenever if you really want to. That's like a lot less stress on you. But I like the waiting strategy. But that's mainly for my limit order. Is it worth getting on other brokerages? Right now, technically no, because there's not anything good coming out. But if there was, it really is, because if they lay out a huge restriction, if they like publicly restrict, because I did go over some shadow banning theories, but if they like publicly restrict you, and then you can go to other brokerages. But I don't think they would publicly restrict you, because they can just keep giving us one share, and then that means we want to move to other brokerages, or we might move to other brokerages, but less likely move to IPO. Like I said, if you have a question, leave a comment. I worked on this at night. Actually, I gotta go like 4 minutes. I gotta brush my teeth, do everything really quickly. Like I said, the hype train will just keep on going. Yes, I think hype will keep on going to these. I don't know how long for. It really depends. If we keep getting these mediocre companies here, most of them should start opening up near even. Maybe start trending down. Basically the main thing is, once these IPOs. Once after their lockdown period for the institutional investors, like the 80 days, 60 days over, if these IPOs are underneath the IPO price, and these pipe investors, which is the institutional investors, cannot sell at a profit, and that's when it's going to go over. But then, of course, even if it is over, we have Discord later, Stripe later. So when these amazing IPOs do come back, we'll come back for like the loan order play, because it's so much hype and there was so much liquidity and there's so many people doing this, and maybe even grab a few shares if we get lucky in the pre-IPO. You know, guys. So that's it for the video. I'm sorry I made this late. I was pretty busy and honestly pretty lazy about this. I went over this more quickly than last time because I had more in-depth data about limit orders and how to buy. But this is my other videos more in depth, and I make a bunch of TikToks on the other stuff too. So you guys have a nice day. I do gotta go to school, so it's a more oral story. Do invest in these if you have Robinhood and you have available cash. If you have available cash, any Robinhood, well, yes, you can do this. But if you don't have available cash, don't need to sweat yourself selling a ton. You can sell a little bit, yeah. But I made a mistake over the last week of liquidating way too much of my portfolio, like over half, and my portfolio shot up a lot because right now I'm in a high risk on asset, and interest rates are gonna get cut. So that wasn't good for me because, but luckily I did get back in literally the day it skyrocketed. So have a nice day, guys. Just don't make sure to have a good long-term strategy. Honestly, if you don't know how, or you got into IPO investing just for IPOs, make sure to hit me follow button on TikTok on here, because I do mostly long-term investing, and of course I do IPOs here. That's the reason why I come off all this great analysis and other people don't, because actually I'm a long-term investor, so I know how to do this stuff. Basically, it's really breaking down really simple. I'm not getting done. This is not the level of analysis you need to be doing for a company. But like for IPOs, it's really sufficient, because honestly, you saw how Gemini absolutely blew past everything else, and that company was really terrible. A lot of hype there. So I'll see you guys later. Have a nice day.